Hi, everyone. Welcome back to Sid City Crypto. My name is David. I'll be one of your co-hosts. And today, we don't have Robin, but we have our man Forrest. We have you. We have a special in-guest studio, and we have a lot of great content. We're talking about Bitcoin and why data has revealed that Bitcoin might potentially be ready for a massive move to the upside. We'll explain what we mean. Also, Coinbase's Layer 2 goes live on mainnet today. What does that mean for the ecosystem? We're going to talk about PayPal. And also, is Phantom done for? Phantom done for. Another one by Sedus. We'll go over that and much, much more. But first, we have a very special co-host joining us. And it's pretty much a gentleman that's part of, is not pretty much, he is part of our channel. That is Forrest from Sisney Research. Forrest, how you doing?
Hola! It's your boy, Big
that's
Four.
right.
Well.
Unexpected.
Well.
Yeah. You gotta say it's your boy Forrest. No, please don't say that. Forrest, man.
Your boy, Big Rob.
It's your boy. No, thank God it's not. All jokes aside, Rob is dealing with some home issues. He sprung a massive leak, and so he's dealing with that. And I'm very sad because show for a very long time. You know, Robin had a bromance with someone in our community member, and his name is DFib. And well, DFib is actually in studio right now, and Rob wasn't able to meet him. So I'm disappointed. DFib's disappointed, and I know Rob is disappointed. We got you. And by the way, man, I literally called you 2 hours ago and said, hey, Forrest, can you help us out? You've always been there when we needed you, man. I love you, bro, and I appreciate you. And thank you so much for taking time out of your busy day for joining us. And very much. All right, before we get started, I want to give a shout out to channel sponsor Cam's Blue Wire Technology. If you run a business and you want to make sure that your cybersecurity, your networking, your IT, everything is in place so you can focus on making money, there's no better company than Tech. Visit bluewiretech.com or click the link in the description of this video. Speaking of videos, gentlemen, if you're watching and you have a lady, hold her tight because there's someone coming for all of our ladies. And well, Rocco.
What is it?
Well, we're gonna see here in a second. Okay. Newman is let's just watch.
Oh, what up, guys? Look at the drip today. Gee whiz! Batman, is that drip? Ooh! Ooh! This is what it look like if I walk up on your girl right now. Yo, you trying to do something or what? Yeah.
Bad.
Forrest, are you worried?
Yeah.
I told my wife, babe. Told my wife, babe, stay home, lock the doors. You ain't going out today. This man is on the loose. Now, that was a little... I have something that might be a little more cringier than that, and that is none other than presidential nominee candidate Ron DeSantis. And, well, it's...
Today, your poll numbers behind President Trump have been behind, and you
Not here.
What happened? That was weird.
Dude, like, come on, bro. Like, you haven't had any training, public speaking, or like just humans. That was so cringe.
Dude's just cracking under the stress, man.
Dude, yeah, like, what is that loud mouth gape? I don't know, man. Now, there is something more cringe than that. Okay? Now, this is not a parody. This is 100% real, okay?
My son does identify as a cat, but I cannot take him to a vet because I tried that, and the veterinarian told me because he has human anatomy that he does not know how to work on him or diagnose him with anything, and he legally cannot. So, and while I do think that is a form of discrimination because, you know, my son, if he says he's a cat, and he needs to be treated like that, like one. You know?
I don't know, man. Where did you find this video? That's
you
a
know,
pearl.
I actually tweeted this on our Twitter, and I said, you know, 5 years ago, I would have thought this was funny, like it's a parody, a joke, and now it's just there, you know. Anyways, we have this. Never let him know your next move. She literally knocked herself
That's
out.
funny. That's funny.
Punch
And
herself in
then,
the face.
go ahead, Forrest. What were we gonna say?
Oh, just she punched herself.
Punch yourself in
Like,
the
how
face.
does that even happen?
Well,
A lot of training and
lot of
years,
training.
years taekwondo, kung fu, karate.
A lot of
all
training and a lot of
mixed up,
alcohol
MMA.
as well.
That's right.
Now this was so this sloth. I mean, dude, imagine like what kind of workouts are these sloths doing to be able to just sleep? I mean, what kind of core strength are we talking about here? Man, I'll tell you what, dude. Sloths are. I went to when we were in Florida. There was this drive-through park, and they had sloths there, and I really wanted to like hang out with one, but it was like $300 a person. There was 5 of us, so $1,500. But what are your thoughts on sloths, Forrest? Are you bullish on sloths?
That question.
I don't
be quite
either.
honest. That's not what I was expecting. Yeah, I mean, sure, I'm bullish on sloths. 300. They're charging $300.
A person.
That's outrageous. A person, yeah, bullish on sloths. If you can charge, that's more than what some huge charge.
In hotel room too.
That's very true. All right, let's move into some actual news. So this was tweeted from Altcoin Daily. Coinbase's Layer 2 base integrates Chainlink ahead of mainnet launch. You know, Chainlink is essentially the backbone of a smart contract, right? It takes all the real-world data that is needed for smart contracts to execute, and it feeds it into the smart contract, and well, that is what the smart contract uses. So essentially, you cannot have smart contracts without an oracle. Are there any other oracles for us that are like at least giving a run for their money to Chainlink, or is Chainlink like the one?
You've got like API 3 is another one, but Chainlink, last I checked, and I actually haven't checked in a couple months, I don't think I've heard of any other Oracle networks really catching up. Chainlink essentially has their strategy was land grab, and they grabbed all the land. I mean, they don't have a lot of competition. They're kind of enjoying a monopoly on the space. And yeah, I mean, now with CCIP, they're turning on the monetization button, the gas fees, and I'm bullish on Chainlink. I think when you start to get into a situation where like, we're not seeing a lot of volume right now, we're not seeing a lot of TVL on chain. When that changes, and you've got, PayPal using, their stablecoin, and they're integrating Chainlink, Coinbase's base, and you've got all these different. It's just going to be like Chainlink's going to be heavily used as an infrastructure play, and yeah, super bullish. We're not seeing the volume yet on chain, but we will, and Chainlink's going to benefit greatly.
That Forrest, staking was introduced, and so that's another form of, hey, let's help with the price action. Also, when you take a look at supply, you have circulating supply at 500 with a total of only 1 billion tokens to ever get into circulation. Now, I know that number is lower than we'd like. I know my target number is about 80% circulating to total supply ratio. I believe yours is kind of in the same ballpark. Does this worry you at all from an investment? Less than 54% of these tokens being in circulation?
It's not ideal, because ultimately the Chainlink Foundation, Sergey, the founder of Chainlink, I mean, they can just turn around and kind of dump them whenever they want, and they make sure that they have continued runway. But it's also, when you just look at the competition out there, and you look at this as an infrastructure play, it's kind of in a space of its own. It's like whenever you value a layer one, you compare it to all the other layers. Look at Solana, and you compare it to the fully diluted valuation of Cardano, and you compare that to AVAX and their usages and their TVL. It's like you start doing that with Chainlink, and all of a sudden you're talking about something that has hundreds of integrations versus something that has like 15. It's just there's no one in the same league right now. So yeah, it's unfortunate that it's 53% circulating supply, but it could be a lot worse. That's a lot better than Optimism. It's a lot better than Arbitrum, if I'm not mistaken, which aren't necessarily comparable technologies, but when you have 20% circulating supply, you have the potential for 5x inflation, right? If you have the supply, the circulating supply can potentially 5x. Here we're at the point where once you cross 50%, you're going to be under 100% inflation. It's not ideal, but it could be way, way worse.
Yeah. Someone said, is Quant a competitor to Link? No, they don't. Quant's not even technically a blockchain. It's more of a software as a service. And so Link would be like Forset API 3, and then we have Charlie 3. I know Ergo is one as well. But Chainlink is the gold standard, right? When you have something as important as, hey, the information needs to be correct and viable for the smart to operate the way they need to, you're going to go with the gold standard, right? You're going to go with the one that has the longevity, that has the infrastructure, that has a track record, and Chainlink is that one. That is why I'm bullish on Chainlink. Now, curious to see if you're bullish on. So we know Judge Torres in the Ripple case, summary judgment, kind of went again, kind of went for Ripple, kind of went for the SEC, just to kind of bring it in perspective and catch everyone up if you haven't been following along. That secondary sales of the XRP token does not constitute an investment contract, but sales to investors and the ICO were. Now, everyone was expecting the SEC to appeal this summary. Looks like they haven't done that, and instead, they're going to trial. As Judge Torres says, the court will seek to schedule a jury trial in the Ripple case in the Q2 of 2024. Torres has ordered both parties to trial by Wednesday, the 23rd, and this is the court document there. Forrest, we're not. Neither of us are lawyers. We're not judges, right? We're not going to sit here and speculate on what we think is going to happen. But are you surprised? And just from just a common sense, what you know standpoint, do you think that's going to benefit Ripple more? Or do you think that's going to benefit the SEC more?
And in the long term, it'll probably benefit Ripple in the overall space. But I think and I could be wrong here. It seems to me the SEC just wants to drag things out as long as they can. They know that if they press this and they try to get it resolved faster, it's probably not going to be in their favor. So the second best thing is to have it not resolved in their favor, but at a later date where they can buy more time and slow down the adoption of crypto.
Let me ask you.
Go ahead.
Let me ask you this question, Forrest. We know people like Jerome Powell, Jay Clayton. It's no surprise that on his way out, Jay Clayton put this lawsuit together, right? And could you entertain the idea that Gary Gensler is under so much heat that to him it's like, all right, Biden's probably not going to be the next president, which means I'm probably going to get replaced. Let the next commissioner deal with this. Let the next chairman deal with this. I don't want this loss on my record. Can you entertain that idea?
Yeah, absolutely. That makes a lot of sense too. Literally just the plan would be to delay, take as few losses as possible in the meantime, and then, get out before things start going against the path that he's been on. Yeah.
I want to give a quick shout out to my ninja with a 99-cent super chat. Thank you for the support, my friend. We appreciate it. Now, from one court document to the other. Now, if you remember, the SEC asked Binance for written accounting, and Binance couldn't deliver, and so they asked for a deadline, an extension. And okay, so again, I'm not an accountant, so I'm not going to talk out of place here. But for me, something like, I'm a business owner, Forrest. You're a business owner. I don't do accounting every single day, but once every 2-3 months, I'm making sure that the money I've spent on my credit card, I have QuickBooks that I use. Sam Bankman-Fried told me it was actually a good idea to do it, so I took his idea on that. But it's something I go in, I check every 2 to 3 months. I make sure everything's in line. Okay, perfect. This is, in expenses. This is in income. This is categorized the correct way. You have the largest exchange in crypto, and they've asked for just an account, their accounting documents. And they were given, I believe, 2 months, and they couldn't come up with anything. They asked for an extension. Just on a surface level, does that worry you? What are your thoughts there?
It's definitely less ideal than the alternative. I think there's, I don't trust anyone with my money, especially, centralized exchanges. So I'm not necessarily in the camp of defending Binance here. But what I will say is, like, they're one of the largest exchanges, and they've been operating since the time, they've essentially built out centralized exchange infrastructure from the ground up. Like, this did not exist 10 years ago. And you're talking about millions upon millions of transactions over a longer period of time. I can imagine, looking back years prior, it's probably a pretty big mess. And trying to make sure that everything's, tight and presentable is probably near impossible, with or without shady business happening. And I'm in the camp that Binance has probably done some pretty shady things. Whether they'll just get fined for it or whether they're insolvent is a totally different discussion. I don't think that's likely that they're insolvent. I think they probably get penalized for some of the things that they've done. But yeah, not necessarily defending them, but I can only imagine it just seems like a really difficult task to actually put that together. I know for a business like my own, it's difficult, and my business is very, very small in comparison with the number of transactions. Even accounting for my own on-chain transactions, my own exchange transactions, there's just a lot of them. I can't imagine doing that across millions of customers. So
that makes sense.
It's not something that I'm freaking out about, but it's you would hope that they'd have it more buttoned up by now, but I can kind of understand why it might be taking them some time.
Yeah, and like I said, none of us are accountants here. We don't know what goes in and what kind of effort it takes to get these documents ready. But still, you missed the deadline. You asked for an extension. Something to keep an eye on. I do want to take a look at the markets, but before I do, today's market segment is brought to you by second channel sponsor iTrust Capital. If you plan on hodling your Bitcoin, your Ethereum, your XRP, and you don't want to pay taxes when you cash out and enjoy your gains in retirement, there's one company to go with, and that is iTrust Capital. If you use the link in the description of this video, you will receive a free $100 in crypto once you fund your account. Now, let's take a look at the crypto markets. Rocco? We do have 1.8 million cryptocurrencies. Holy smokes, man. That is a lot. 655 exchanges. We have the total market cap coming in at $1.18 trillion with 24-hour volume, a smidge under 40 billion. Bitcoin dominance under 50% and ETH dominance at 18.9. Speaking of Bitcoin, we pumped up to 29.9. Now, we had Gareth Soloway on here on Monday, okay? And, people have been giving Gareth a lot of flack, saying he's always bearish, and he's still bearish. And someone posted on one of our tweets yesterday, something like, "Oh, Gareth is shorting Bitcoin at 30K." And I was like, I would be shorting Bitcoin at 30K as well. It's proved to be resistance ever since it broke to the downside. And again, yesterday, it got up to almost 30K and it got rejected back down to 29.4. Forrest, what's the structure on Bitcoin looking like? And then a little bit later in the show, we're going to talk about why I personally think that Bitcoin is getting ready for a massive move to the upside.
Yeah, absolutely. So I've got all my levels marked out here, as well as some key trend lines. But you'll see the base structure that I want to outline here is really straightforward. First, you've got these two trend lines. You got trend line B, trend line A. This is making one giant bearish ascending wedge, right? So there's your bearish pattern. That being said, this pattern is still valid if Bitcoin runs all the way up to 35 or 36K. Okay, so like we could still be in this pattern and it not even play out until 35 or 36K. So that doesn't, just because we're in a large bearish pattern does not mean that the top is in or anywhere close to being in. It might be, but I doubt it. The second thing I want people to keep in mind is just this bottom trend line here. I'm going to move over here and show you this trend line. I am bullish and I'm not looking for shorts. I am not looking for a bearish take on the market until we break down below this trend line. So until we break down below what would now be roughly 28.5 $1,000, give or take 28K, and start printing candles outside of this, I'm not bearish until that happens. Now, once that happens, we'll reassess, and I am much more likely to have a more bearish disposition to the market unless, we can reclaim and start moving back up again. But right now we are in a series of higher lows, right? Jamming up into resistance. Technically, we also have higher highs, but jamming up into resistance. And the other pattern that we've got going on right here, which I'm going to kind of outline, is a bullish ascending triangle. These usually break up to the upside, and they usually break up pretty violently. A move up to 35, 36K off of a breakout from 31 to 32K in this ascending triangle would be very bullish and pretty textbook for how this pattern would play out. There's some targets that would be potentially as high as $48,000 to $52,000 off of just this pattern alone. So we've got a bullish ascending triangle within a bearish ascending wedge, jamming up into resistance around 30, 31K. All the while, we've got a couple of key trend lines to keep an eye on. If I zoom in a little bit further, we'll go to the 1 hour. You'll see the current trend line that we're on extends from this 31.8K high to our most recent stab at 30K. We've now stabbed at 30K twice trying to take it out, but we broke the most recent downtrend line. That's a positive signal. It's a potential reversal signal. Obviously, you have to take out a downtrend line if you want to reverse a downtrend. And this being our most recent downtrend, this is our first reversal signal. We've also held this key support level at around 28.9. That's our 10x short margin pressure level. That's a point at which you can no longer short Bitcoin on 10x leverage and maintain a liquidation point above the swing high, right? This kind of 31.8K high. So that's important that it's held. And we've also technically made a very small but still relevant higher low here. We've also made a small but relevant higher high. So we're getting signals in the short term that we may be in a trend reversal. A pretty key area of support, if I zoom in here, would be roughly $29.3 thousand. That's where you've got a little bit of confluence here between this 3x long margin pressure level that roots back down to 19.5K, which was I believe our SVB collapse low, which we'll talk about in a little bit. Overlapping with our downtrend line. So we're actually in a situation where if we hold this kind of level here, and I'm not going to be, I might take a trade here. I just prefer to have more than two confluent levels of support. You're getting pretty decent risk reward, even keeping a stop loss below the 10x. We bring the stop loss in a little bit tighter and you're looking for a move back up to the range high, this long 2x long margin pressure level that's capped our range. That's a pretty solid risk reward. Even keeping this below our 10x short margin pressure level, that's going to give you 3-to-1 risk reward. When we're seeing the downtrend structure break and a potential for a reversal, I like that risk reward. I would just like to have a little bit more support here at 29.3K to make me a little bit more comfortable. But I'll personally probably take a little bit smaller sizing on that just to be careful. And I'll probably stop myself out rather quickly if we move back into this range. Yeah, that sums it up for Bitcoin. I think it's just playing the levels and just keeping an eye on the trend lines. Are we breaking through 31 and 32K? If so, we probably see further upside. Are we falling down below this trend line? If so, we want to be very, very cautious. The main thing, in my opinion, the main news item to pay attention to above all else is the Bitcoin spot ETF approval. If that gets approved, I think we rip. If it gets denied, I think we crash. Yeah, and if it gets delayed, then it's probably more chop.
Okay, well, I do have another scenario that might make Bitcoin rip, but I do want to talk about a scenario that I'm not happy with, and that is our like ratio. We're at 155 viewers and only 65 likes. What's going on, guys? Do you not like the content? Do you not like me? Do you not like Forrest? I know you do because you're watching. Make sure to hit the like. It helps YouTube algorithms see that, hey, these guys are liking what they see, and well, guess what? It'll show our channel on people's homepages, and we grow our community that way. Also, in honor of Robin not being here, I know we talk a lot of crap, but I love Robin. And so let's get an all-out train going in honor of my friend Robin and his reverse osmosis water system. May that rest in peace, and may a new one come about. So drop an Ola in the chat. Let's get an all-out train going here. Also, if you're new here, say hello, and I will give you a personal welcome. I won't give you an Ola. I'll just give you an air hug and tell you how much I appreciate you. Now, taking a look at the rest of the markets here, we have Ethereum at $1,850, BNB token at $243, XRP sitting at 65 cents, Doge holding steady at 7.5 pennies. Pretty flat on every time frame on here, which is the 1 hour, the 1 day, and the 1 week. Cardano is at 29 cents. 30 cents has been resistance for Cardano. But it looks like Solana is getting ready to flip Cardano. So Solana got all the way down to about $10, $12 after the Sam Bankman-Fried shenanigans. And now it's back up to $24.50. It's showing a lot of strength. You guys know Forrest is bullish on Solana. I've come around and I'm bullish on Solana. And what I'm not bullish on is Tron, and they're sitting in the top 10. So Polygon is currently sitting outside the top 10, but only behind by about $500 million. And then we have Polkadot, Litecoin, SHIB, and DAI. And I'm going to ask you about SHIB here in a second for us. Just to take a quick peek at the crypto bubbles over the last day. And let me go ahead and refresh this page. So Aptos is up close to 11%, and there is reason for that. Big partnership with Microsoft. Probably going to talk about that. And then, of course, we have Chainlink. That is at up 3.6%. Some of the biggest losers. OP down 7%. And I do want to clarify something I mentioned on Monday, that Coinbase's layer 2 uses the Optimism token as gas. I was incorrect. They use the Ethereum token as gas. And so so that was my apologies, guys. Wrong on my end, but yeah, there we go. Also, Kenny G, $2. I think it's you, Dave. Hello. Now say it back. Hello, Kenny. How you doing? Bow, bow, bow. Now, Forrest, when you were on our show on Friday, you talked to us about SHIB. You said you're long SHIB, and then that thing ripped for like, I think it was 15% or so. Did you end up exiting that trade setup? Oh, it's still up about 17%, 16% on the week. Are you still in that trade? Did you take profits? Yeah.
Yeah, so I am no longer in that trade. I caught this, probably the best trade for me in the last year and a half as far as execution goes. Caught the entirety of the move, exited at the exact top with the entirety of my position, and caught it from the very beginning. So caught the entire move, and then also caught the dead cat bounce, which I don't know if I'm the initial bounce. I'm not going to call it a dead cat bounce because there may be some more upside for Shiba Inu. We still have quite a we got like a solid week before the layer 2 launches. But yeah, from an execution standpoint, I'm really proud of myself for that one. And yeah, just was able to catch the not just the meat of the move, literally the entirety of the move. So yeah, it's pretty straightforward.
Let me tell you guys something here, okay? This is not by accident. This is not by coincidence. This man puts a lot of time into research and understanding, and he shares that research with people that are subscribed to Assisting Research. If you're, and honestly, I'm being 100% honest here. I have a subscription, and thank you to Forrest. You gave me access to that. I appreciate it. And I've made money using it, right? There's a point where you just don't have enough time to research everything yourself, or you don't have the eye of seeing things. And so you trust people like Forrest who put the time in that you don't have. And on top of that, you're able to support people like him. And so if you've been a member of Sistine Research and the Research Hub over the last 3 months, I would argue you've probably made your money back 30-fold of what you would have spent on it. So highly recommend, if you're serious about making money and trading, I would subscribe to it. If you go to Sistine.ai, or if you want to support Sin City Crypto as well, there is an affiliate link in the description of this video. I do want to share this for us, and I want to get your take. So this is from CoinShares, digital asset funds flow per week. And I want to share this, okay? So let's take a look here. Flows by asset, and this is in millions of dollars. So this is week, month, and year to date, okay? So in the week, we've seen $111 million flow out of Bitcoin. And well, look at who the leader is with $9.5 million flowing into Solana. Solana has been the leader on the week. It has been the leader on the month, and it is second only to Bitcoin on the year to date. Is there a narrative shift for us happening for Solana on not just a retail level, but an institutional level as well? What are your thoughts on this chart? Do you see more of the same continuing to happen for Solana?
Yeah. So Solana is seeing an expansion in their DeFi ecosystem. You're seeing some pretty basic DeFi protocols being built, but they're pre-token launch. So you have a lot of them are adopting the strategy of giving users who supply capital to these DeFi protocols points, and these points are a really great placeholder for airdrops. Just because you earn points every single day that you have capital allocated to these DeFi protocols. So if you look at the DeFi TVL, since the beginning of the year. It's gone up from around 200 million and is now steadily increasing to over 320 million in the last 7 or 8 months. So it's been a nice, slow, steady climb. And it's just because, in my opinion, these inflows are very likely linked to the expansion of DeFi, people starting to farm, people who... Right, with DeFi on ETH, one of the big issues is like you kind of have to set it and forget it unless you have large amounts of capital. So unless you're moving around millions of dollars, otherwise you're just getting eaten up by transaction fees, right? If you're trying to move around and farm, 7, 8, 9% yield, which is a solid yield rate on Ethereum. But in order to do that, you're having to move around, a couple $1,000s multiple times. You're just getting eaten up. You're not making any money because you're getting eaten up by gas fees. With Solana, the gas fees are so ridiculously cheap. Even on Base today, I got charged $1. I got charged $1.60 transaction fee on Base, which is Coinbase's layer 2, and then I also got charged a $2 transaction fee, which is fine. But imagine my transaction sizing was $100. Well, then all of a sudden, that's you move that $100 a couple of times, and it's down to $90. It's down to $80, right? Whereas with Solana, you can actually move your funds around to whatever has the highest yield, and you can do it for essentially free. It's like a fraction of a penny transaction fee. So for a lot of smaller DeFi yield farmers and just kind of like retail people who they have $1,000 that they want to earn 7 or 8% on, and they don't mind the smart contract risk, and they don't, hey, if I lost this $1,000, it wouldn't be the end of the world, but I want to learn DeFi. I want to qualify for these airdrops. I want to earn 7 to 8% yield. It's pretty attractive, and you have a lot of those, retail kind of smaller, level customers coming in and farming these airdrops and taking, part in Solana DeFi. So yeah, I think that's a large part of it. You've got some NFTs, a decent NFT scene on Solana, but compared to a lot of other chains, that don't necessarily have that NFT scene. But Solana DeFi is kind of slowly grinding upwards, which is interesting to see.
And Forrest, you deal, you play around in that DeFi space a lot more than I do. And from what we spoke about, and correct me if I'm wrong, but Solana has been the most user friendly, the most, right? I mean, the UI has been great, right?
Yeah, 100. It's what I personally use. And look, with any DeFi, I'm not telling anyone to just go and just dump all your money into any DeFi protocol on any chain. Hacks are still rampant. They're still rampant on Ethereum. We just had a Curve hack. There was a hack on Solana and a DeFi protocol a week or two ago. So these hacks are still rampant. You definitely have to do your own research. You definitely have to be careful. But from a user experience perspective, rather than waiting 30 seconds to 5 minutes for a transaction to go through and paying $10 to $20, it's near instant and it's near free, and you can just kind of move money in and out, and the user experience is really solid. So it's what I use for most of my DeFi stuff for yield farming.
If you're bullish on Solana, put a 1 in the chat. Rocco, put a 1 on our behalf. We're bullish on Solana. Another crypto we're bullish on, or another asset, is Bitcoin. And we had Kathy Wood, who spoke to Eric Balchunas, who is the senior ETF analyst at Bloomberg. If you guys have been watching our channel, we've had his colleague James Seyfert on a show, who is also an ETF analyst at Bloomberg as well. And they have recently moved their odds of an approved spot ETF up from 50 to 65%. There is rumblings coming around from inside BlackRock that it's not a matter of if, but a matter of when the SEC approves these spot Bitcoin ETFs. And let's hear what Kathy Wood had to say. Now, if you guys remember, the first one that would have to get approved would be ARK. ARK Invest, they filed first. The first date is August 13th. So in 4 days, we're going to get a preliminary decision. It's either going to be approve, deny, or delay. I'm in the camp of delay. I know a majority of people are in the camp of delay. Now everyone's saying, oh my God, they're going to approve it. I don't think it's going to get approved on the 13th. I hope I'm wrong. But if it does, God candle. That's all I'll say. And so let's hear what Kathy Wood had to say.
So you are in this race. Let's talk about the race a little bit. The first important deadline coming up is August 13th, where the ARC filing, the SEC is either going to delay it, which we think they'll probably delay it, and then BlackRock is later. You filed before BlackRock, but BlackRock came in with the surveillance sharing agreement with Coinbase. That was novel, right? Now we're looking in the future. There's talk of a common clock where the SEC could approve a bunch of ETFs at once, putting you on a level playing field with BlackRock and others. What's your take on how this will play out, given you filed earlier?
I think you're probably right that August 13th will come and go, and I think the SEC, if it's going to approve a Bitcoin ETF, will approve more than one at once. So then, again, because most of these essentially will be the same, and it will come down to marketing, communicating the message. You know, we've been putting out our Bitcoin monthly for the last year. We are now starting a Bitcoin brainstorming session. Our first one we launched last Thursday. So we're trying to get the word out there that our research is deep. And we've been doing it since 2015 when we gained our first exposure to GBTC. We were the first public asset manager to gain exposure to Bitcoin at all in 2015.
That's exactly where I want to go. The Grayscale Bitcoin Trust, known by its ticker GBTC. If you look at ARC-W, for example, your ARC Next Generation Internet ETF, right now I see GBTC as the third largest holding. If we are in a situation where the SEC does give its blessing for a spot Bitcoin ETF, would you plan to sell out of GBTC and buy one of these physically backed funds?
I cannot talk about what we would and would not do. And in fact, our compliance team is, giving us marching orders not to talk very much about this filing and its aftermath at all. So just the fact that we filed with our partner 21 shares is as far as I can go.
Okay. Forrest, what are your thoughts on that? Do you agree with Kathy Wood that once the SEC does approve, it's going to be multiple at once? I mean, I can't imagine a scenario where they just give one such a massive head start, especially when their buddy BlackRock is kind of next in line.
Yeah, I agree. I mean, I think unfortunately for ARC and Kathy Wood, it'll probably be delayed, and then they'll wait for BlackRock's turn and then approve for BlackRock. I think it was Mike Novogratz of Galaxy Digital that kind of sparked some of the speculation that we saw in Bitcoin yesterday, when we really started rallying, and it was due to him saying that he talked to people at BlackRock, and they seem to think that it's not a matter of if, it's a matter of when, and they're expecting a timeline of approval in sometime in the next 6 months. So I think ultimately I'm expecting it in the same timeline. I don't know exactly when it'll be, but yeah, I mean, when it does happen, I'd be extraordinarily bullish. The other thing that she said that I want to draw attention to is that it'll come down to fighting for market share, right? So all these ETFs are going to be launching, and they want your money in them, right? Because that's how they make money. So you have like 7 or 8 or however many have applied for an ETF, offering the exact same identical product, a Bitcoin spot ETF backed by physical Bitcoin, or backed by actual spot Bitcoin. When you're trying to market that, you are going to be pumping up or really selling the narrative for Bitcoin. If you're trying to grab market share and have one of the larger ETFs, that means some of the largest asset managers in the space, including BlackRock, are going to be marketing hard for market share. And a byproduct of marketing hard for market share for a Bitcoin spot ETF is marketing Bitcoin hard. So they are going to be shilling Bitcoin so hard I think over the next year or two, we're going to see Bitcoin, assuming that we get this Bitcoin spot ETF approved. I think we're going to see Bitcoin skyrocket. I think it's going to be shilled hard by all the asset managers, and you're going to see a lot of inflows into crypto.
Of course. And guys, if you want more insight into ETFs from someone who literally that is their job, and he works at Bloomberg, go check out a couple videos. The first one I want to point to is this video here, ETFs Explained. This was about a month ago. If you want something more recent, we did have James from Bloomberg on. It was with me, Forrest, and Robin. This was the live show from last Friday. So if you want to learn more in depth about ETFs, go check those videos out. Also, if you're not subscribed to our channel, why not? Please do so.
Very nice video. Yeah, explaining all the date and everything in detail.
Yeah, it was very good. And so let's go from one bullish narrative of Bitcoin to another one. And so the title of today's show is New Data Suggests That Bitcoin Potentially Could Skyrocket. And what do I mean? Well, here it is. Moody's mulls downgrades for top U.S. banks citing funding risks. This is from Crypto Potato. Big three credit rating agency Moody's has downgraded numerous regional banks in the United States due to weak earnings last quarter and a sizable unrealized losses on their balance sheet. Meanwhile, banking giants including BNY Mellon, which is one of the oldest banks, if not the oldest bank in the United States, U.S. Bancorp, State Street, and Truist Financial have been placed on review for potential downgrades. Moody's note highlighted profitability pressures at many banks that are expected to hinder their ability to generate further capital. Then we have this from the Kobayashi letter, which I recommend you guys follow this. This is a very high value account, right? A lot of great things. They break it down pretty simple. So this was from yesterday. Moody's cuts rating on 10 regional banks. Those include M&T, Pinnacle, and Commerce were among those downgraded. And it goes again, talking about what the article spoke on is these next three giants are under review. And I do want to point the attention to Forrest. I know we spoke before the show, and I'd asked you to take a look at what Bitcoin did after Silicon Valley went under, after the Fed had to open up that discount window. Can we take a look at that? And then let's talk about the potential of what else could happen moving forward if this starts to cascade and more banks start to get downgraded.
Yeah, absolutely. So if we go back over to the Bitcoin chart here, I've kind of marked this out. You'll see it says SVB collapse over here. Initially when banks are going under, that's bad for stocks. It's bad for equities. It's just a bad look overall. You have people really worried about recession. You have people sharing, how many banks have collapsed and gone under since, comparing it to 2007, 2008, right? So when banks are going under, it's not a good signal. People start freaking out and they get really massive fears of recession. And you see that reflected in equities, but we also saw it reflected in Bitcoin, right? And initially it was reflected in a very negative manner where we actually saw Bitcoin crash. But then once it became clear that there was going to be some sort of a bailout, not necessarily for Silicon Valley Bank, but for some of the other banks, and that there was going to be no loss of assets. Essentially, there's the customers' funds were not going to be lost; they were going to be bailed out. We actually saw Bitcoin really thrive in that narrative. Thrive in the narrative that, hey, first of all, the damage has been stopped for right now. You're not going to have any actual loss of funds. So that kind of stops the hemorrhaging and the bleeding in the equities market and the fear and this fear of systemic collapse in the equities market. But then outside of that, you have this idea that hey, we're in this situation because of the rampant printing of the US dollar and the inability of the Federal Reserve to adequately and the government to adequately manage risk and debt and the balance sheet. And then you see, Bitcoin is a harder asset. It's got a limited supply, and people, decide to start, looking into Bitcoin as an alternative, store of value, so to speak. So really caught a strong narrative out of that collapse and pushed up to new highs. So the one thing that I will say here is I still stand by I think even if banks start going under in the longer term, the thing to pay attention to is the Bitcoin spot ETF. I think that will have the outsized impact on Bitcoin's price. It's more endogenous to Bitcoin's price. It is a Bitcoin spot ETF, right? And banks don't necessarily hold Bitcoin or have a direct effect. They have an indirect effect on Bitcoin's price. They don't necessarily have a direct effect on Bitcoin's price. So while I still think it's important narrative and something to keep track of, do know that you can get kind of these fake outs, and it can be difficult to trade and difficult to invest because of. Could it if banks start going under or getting poorer ratings, could it end up helping Bitcoin? Certainly, that's what we saw, right? That's what we saw a narrative emerge after the SVB collapse. But please note that, look, if banks start going under, and we get a recession and there's actual loss of customer funds and it gets way uglier than SVB was, that's not necessarily great for Bitcoin in the short term. You probably see some damage done to the Bitcoin chart in the short term. And I say that because, look, if people are losing their funds, they don't have funds to invest in Bitcoin, right? Like if you go into your bank, Chase or Truist or wherever your bank is, and your funds aren't there, and they're not secured by that. If you're losing, over $250,000, that's secured by the FDIC, it's a problem. All right, if we go into a massive recession, right? And I'm not saying that we are or aren't, but Bitcoin is still, for a lot of people, viewed as a risk asset that is allocated to based on expendable income. Right, even myself and Sin City Crypto and David and Robin, they'll say don't invest in anything, even in Bitcoin, that you can't afford to lose. Right, in the short term. Do I believe that Bitcoin will always find a way to bounce back to some degree over the next couple of years? Yes, but if banks start going under, I don't necessarily think that it's wise to just take your life savings and dump it all into Bitcoin. So I want to be very careful. Yes, the narrative of banks being downgraded, banks going under, in the long term, could it positively affect Bitcoin? Yes, but I don't necessarily think it's wise. Oh, this bank went under. Let me just take all of my life savings and stuff it into Bitcoin right now, because you could end up in a situation where you're facing a 20 or 30% drawdown, or you could be in a situation where if we have a multi-year recession or a recession that's 6 to 12 months, that you're down really, really bad for a period of time. So I just want to be super clear about that. Is hey, this is potentially positive. It's why Bitcoin was created. It's potentially positive for Bitcoin. But don't fade the idea that, hey, if people are actually losing funds and banks are going under, that's not good for risk assets in the short term. And you could see some really nasty drawdowns. And, you don't want to be in a situation where you're over trading this with too much of your capital. So, that's my general take.
For me, I look at, history and how the markets have reacted. And I'm just taking a look at the most recent example. And I'll share this tweet again. But look at this timestamp, right? August 8th at 6 a.m. my time, Pacific time. Look at the Bitcoin chart. What is this date? August 8th, 7 a.m. And look at these candles on the 1 hour. And so I'm just looking at how has Bitcoin reacted when news like this has come out. You're looking at from bottom to top wick, 3%, which over a matter of, 7-8 hours? That's a pretty big move. For what we consider still in essentially a longer term bear trend, right? We've been trading sideways, but people are saying we're still in the bear market. I believe we're in the beginnings of a bull market, but still, we haven't been able to break 30K. Bitcoin's kind of been trading sideways for the last 5-6 weeks. And we saw a 3% move, coincidentally, when the banks got downgraded. We saw what happened with Silicon Valley. And yeah, I agree. Looking at it logically, people's money is locked up. I don't got extra money to put in there. So I also do think it depends on what kind of bank. Silicon Valley Bank was mainly for businesses, entrepreneurs, and companies. And so it wasn't the typical retail investor. What does that look like if it's one like BNY Mellon or one that has more retail deposits? That we don't know, but what I do know is anytime bad news comes out about banks, Bitcoin starts to pump up. If this thing continues and banks continue to have issues, I can see Bitcoin finally breaking out of this low volatility range and potentially make new local highs, 32, 35K. Also, want to give a big shout out to Miss Team Crypto is in here. Guys, if you're not following her, great content, such an amazing human being, doing a lot for our space as far as education. So big shout out to her. Also, big shout out to Maxine Waters. Just kidding. No shout out to Maxine Waters. But we're going to talk about her. And Forrest, I haven't gotten your take on this PayPal stablecoin, so I'm curious to get your take. But first, from the block, leading Democrat Maxine Waters voices concern about PayPal stablecoin. Shocker, shocker. Leading House Democrat Maxine Waters says she's deeply concerned about PayPal's move this week to launch its own stablecoin without having a federal framework in place to regulate the asset. Isn't that your job? Literally, that's your job. You guys can't put your shit aside and come together and figure something out. Like the most direct, easiest thing. Stablecoin, it's backed by the dollar. People use it to go in and out of trades. Like, it doesn't get more simple than that. You can't even come to an agreement on how to regulate it. So what are companies supposed to do when countries outside of the U.S. are harnessing the technology and pushing the space forward, and the U.S. and their companies are falling behind? You expecting to sit there and wait months and years for you guys to set your differences aside, come to the table and figure out how to do it? I mean, it's simple. It's very simple. Prove to us that it's back 1-to-1. You want to regulate it? Fine. These companies are not going to have an issue doing that. But you're sitting here and saying, well, I'm deeply concerned because there's no federal... like, that's your fault. That is you and your colleagues' fault. It's very irritating. Extremely irritating.
We can tell. You get upset.
Yeah. This is what she said. PayPal, with 435 million customers globally, exceeds the number of online accounts at all the mega banks combined. Given PayPal's size and reach, federal oversight and enforcement of its stablecoin operations is essential in order to guarantee consumer protections. They are a publicly traded company, okay? They are the largest fintech company in the world. And they've been that way for a very long time. And now you're worried because they're going to launch a stablecoin? I don't understand. I don't get it, dude. They handle billions and billions of dollars of people's funds. What does this change anything? Unless you think they're a rotten company at its core, which you should be looking into their business practices now and now wait for them to launch stablecoin. So Forrest, what are your thoughts on the whole PayPal stablecoin? Is it a net negative or positive for the space? And if you want to add any commentary to our friend Maxine here, please feel free to do so.
Yeah, it's a super net positive, very, very much a net positive, because ultimately it means more money on chain, more liquidity on chain, more money moving from off chain to on chain is going to be bullish for the crypto ecosystem as a whole. Do I think that this is going to be a decentralized stablecoin? No, it is not. It's going to be a super centralized stablecoin. That's fine. It's just going to be, just take it for what it's worth, right? Take the trade-offs, right? If you want a decentralized stablecoin, use, something that's decentralized. This is going to be a centralized, over-collateralized, or one-to-one backed stablecoin. It's pretty straightforward. That's essentially what Tether is. It's essentially what USDC is. They'll be able to freeze your funds. They'll be able to drain your account if they want to. It'll be no different than keeping your money at a bank, except for it'll be directly on chain and open you up to being able to move it across the blockchain, find yield opportunities, spend it on chain, and so on and so forth. A couple of main points here that are that I want to highlight. One is that this probably is a signal that PayPal is feeling more comfortable with the regulatory environment in the space. I don't think PayPal would be launching a stablecoin if they felt like the regulatory environment was not going to allow it. So I do think this is a positive shift. Yeah, Gary Gensler is a goblin at the SEC that's running around trying to be anti-crypto, but I don't think that he alone is going to be able to stop major companies from adopting the technology. It's coming whether he likes it or not. And I foresee a shift in the regulatory environment as well. The other thing is this makes so much sense for PayPal. I haven't checked their stock recently, but I know it's down pretty bad. But this is the most profitable business model in crypto. It's insane. Tether's making so much money. And on top of that, nobody trusts Tether. There's actually I don't trust anybody, but I'd trust PayPal before I trust Tether, right? Especially if this is regulated in some degree to some degree, and it's like more transparent, and you can actually, it's better audited and it's onshore in the United States. The way this business model works is you just take in real dollars, right? You hold them, and then you issue stable coins, and then people can redeem those stable coins for their real dollars at some point or another. But in the meantime, while you're holding onto those real dollars, you can stick them in U.S. Treasuries. And right now earn 4, 5, 6%, whatever the yields are right now, for short-term treasuries. And if the stablecoin's backed by U.S. Treasuries, that's completely fine. Those are pretty liquid, pretty low risk if they're short-term treasuries. So if you have $1 billion, oh, go ahead.
No. I was just gonna say I agree with I agree with you. Your statement of they think the regulatory clarity is more, but I also think there's a reason they launched it now. I mean, you're essentially making 4 or 5% off of other people's money. And what do I mean by that? Let's launch a stable coin. Let's let people mint, put up their dollars. We'll take their dollars, put it in a 6-month T-bond, earn 5.25%. I mean, what better time than now? Especially when you have that many users. You already have crypto on your platform. You have Venmo in your back pocket. So to me, it makes a lot of sense. The clarity thing, I think because businesses want to make money. And if I can take your money, Forrest, and I can put it in a T-bond and earn 5.25%, I'm going to do that. There's essentially like no risk. If you do it the right way, there's no risk to you. Okay? Unless you think the US government is going to collapse, to which at that point, then you have bigger issues than trying to make some money off of treasury bonds. And so I think it's a lot of it, but it does signal to me that these companies are starting to realize that if we don't get our stuff together, we don't start building out some infrastructure and getting into the space, we're going to be left behind. And that's where we're at, and that should excite you, because for a company like PayPal, knowing that Congress is currently working through a stablecoin bill, for them to come out and say, we're just going to go ahead and launch it, like that should tell you something. To me, that tells me, to them, they see the opportunity in front of them. They know the space is moving forward fast, and they want a piece of that pie. They don't care if there's no legislation. They don't care if they're working on legislation. They see it as a big opportunity, and rightfully so. Sorry, I kind of cut you off. Was there any other point you wanted to finish on this one for us?
The only other thing is I'd say, and look, I don't trust Tether. They're shady. They've done shady stuff in the past, but the whole, just the fundamental simplicity of the business model, I think is why, like, I'm not that terrified of Tether being, potentially under collateralized. It's as simple as it's so profitable. Unless they are just straight up stealing billions and billions of dollars, it makes no sense to do that, because you're making billions, you're making so much money so easily with so few employees. It's such an easy, you're just taking in billions of dollars, essentially staking it with the US government, buying T-bonds, earning 4 or 5%, earning hundreds of millions of dollars a year off of other people's money. It would make no sense to ruin that by just trying to steal billions of dollars and then potentially end up in prison. They've got the best thing going of anyone in the crypto space. Why ruin it by being shady and trying to steal money? I'm sure it gets more complicated than that, but yeah, I mean, just kind of a segue. Like, the business model is so simple and rock solid that I think that's why Tether's been able to last as long as it has, despite allegations that they're doing shady things.
Yeah, and for me, free markets are amazing, and competition, I've said this before, it breeds excellence. And so when Tether has an $80 billion market cap and the next biggest one is $30 billion, which is USDC, competition is great, because that's how the space moves forward, especially in a new space. And I also want to just caveat this, because a lot of people are saying, they're freaking out, oh my God, in the code of PayPal stablecoin, they can freeze or take your money. Tether and USDC can do too. Any centralized authority that is issuing these can do the same thing. And so let's not blow it out of proportion. Now, I'm not going to be using PayPal stablecoin, but guess what? Millions and millions of people will be. And that is a risk when you deal with centralized entities, is the power and control to be able to censor and take your money. It is what it is. I do think centralization and decentralization have a spot and will play a role in the crypto ecosystem. But the beauty is you'll have a choice to interact with one or the other. Speaking of interacting, Base is going to be interacting with everyone now as the mainnet officially opens to all users. Now, Coinbase's layer 2. What is different from Coinbase launching their own chain versus something like Crypto.com or Binance is they don't have their own token. They are leveraging the Ethereum token for gas fees. So as the article reads, Base, the highly anticipated layer 2 network from Coinbase, has opened its doors to all users. More than 100 dApps, protocols, and brands are already live on the network, including Coca-Cola, which will issue digital collectibles on the network, OpenSea, and Aave. I think that's all I have highlight. Oh, here we go. Base allowed developers to begin tinkering on the network in mid-July to prepare for the public launch. Now, the pre-launch phase precipitated a chaotic week of growth for Base, with traders racing to speculate on new meme coins on LeetSwap. And we know the big one was Bald, which got rug pulled. And so, guys, let's get our shit together, okay? We got the biggest bull market in the history of crypto about to come in the next 6 to 18 months. And so let's not be so short-sighted and try to chase a quick 10, 20, 100x on 99% of these meme coins and tokens that either get rug pulled or get completely left in the dark. And let's really focus on the projects that are going to blow up in the next cycle. You know, Forrest, what are your general thoughts on Base launching? You think this thing could be successful? And what are your thoughts on them not having their own token? Should that be the baseline? Should that be kind of the standard for exchanges moving forward because of the pros and cons of obviously not having your own token?
Yeah, I mean, if these layer 2s really don't need to have their own token, Optimism's kind of a weird one because they opt to use the Optimism token as gas, but like even Arbitrum uses the Ethereum token Ether as gas. So I mean, ultimately, if I'm not mistaken, the revenue model is just that Coinbase ultimately takes some sort of a fee from validators. This is probably very good for their revenue, and the way that the end user or, the way that the investor benefits from this is buying Coinbase stock. I don't think Coinbase wants to get into, especially right now with the regulatory environment, I don't think they want to get into launching their own token. That's just, being sued by the SEC right now, and then you launch your own token. This is not a good look. Maybe they will at some point in the future for governance purposes if they want to make this more decentralized. But ultimately, it's kind of like a hybrid mix where it's pretty centralized, right? Coinbase runs it. So again, it's a spectrum. There's always going to be use cases for more centralized chains, and there's always going to be use cases for more decentralized chains. I think this is good for Coinbase. It makes sense, and I'm a fan of competition in the space.
Yeah, it's kind of like, bringing people into your ecosystem and keeping them there. And, if you're offering a layer 2 for people to build dApps on and play around on, you got the support of Coinbase, and you got the exchange, the platform. Again, centralized, but I'll say it again, centralization and decentralization both have a place in crypto. If you're in here and you're a seasoned veteran, you don't have to deal with the centralized entities if you don't want to. That's the beauty of it, is you have options and choices. Guys, I do want to share our website. And before I share the website, I want to give a massive, massive thank you to Jimmy. We were having some major issues with our domain. It took a few weeks, but man, Jimmy came through as he does on multiple different variations or levels. I can't figure out the word. And also big thank you to Rocco for helping me set this up. But here it is. If you haven't checked it out, this is SinCityCrypto.io. Here's my beautiful face. And well, this is some random guy we found on the street. If you go here, you can see, our trailer video here, Step Inside Our Live Show Experience. Also, we have the links to all of our social medias up here. You can see the About Us page. If you want to learn a little bit more about me, Rocco, and Robin, little backstory about us, you can go read that there. Also, contact information, how to get in contact with us. Affiliate links, if you want to support the channel. Also, big shout out to our whale members here as well. You guys have your own page. So big thank you to you guys. And then, of course, a link to the merch store. Make sure to go check that out. And I do want to mention we are exhibitors here at our favorite NFT convention, which is NFT XLV. Last year, it was CNFT Con. They rebranded to be more inclusive of other chains. Cardano Foundation will be there. Charles Hoskinson, I'm hearing, will be there. This is going to be a fun event. Again, we are an exhibitor there, and I've spoken to the founder. We will be doing giveaways for our community, and so we're excited. We hope you can come join us. You want to buy tickets, you can do it here. Also, they have special links for the hotel if you want to book there and save some money. It's going to be a fun time. We're going to have a lot of fun. We're going to do a lot of fun things. We're brainstorming some fun ideas. And so we look forward to bringing you guys on. We will be doing some giveaways and raffles. And then, guys, please, please, please go follow Forrest on Twitter at 00Forrest. That's Forrest with 2 R's. Also, subscribe to his YouTube channel, Sistine Research. We do have that link in the comment pinned to the top of the chat. So make sure to go do that. Also, go follow us on social media. We're at Sin City Crypto 1. And Forrest, before I Category 1 tornado us out of here, anything you want to leave us with?
No, that's it. Thanks so much for having me on. It's always a pleasure. I'll be back on Friday if I'm not mistaken. So looking forward to it. Yes, sir.
Yeah, we love having you on, man. And thank you again on such short notice. Every time we have reached out to you to ask for help, you have never said no. And to that, my friend, we appreciate you. You're a great person for the space, great knowledge, and just a great human being. So we appreciate you, Forrest. And then also go check out the merch store. And also, Rocco.
That's a category 1?
It's a Zacatecas.
Okay, let's go.
Has been winning in Vegas. Guys, thank you so much for tuning in. Make sure to come back tomorrow. Same time, same place. We have Magic Internet Money joining us. Thank you to Forrest again on behalf of all of us here at Sin City Crypto. We love you guys. Until tomorrow.
Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin, it's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting